Welcome to another update video on Australia's cash rate. Enjoy. At today's meeting, the board decided to increase the Australia cash rate target by 25 basis points to 3.35%. It also increased the interest rate on exchange settlement balances by 25 basis points to 3.25%. To validate the need for a ninth consecutive increase, the board issued the following statement. Global inflation remains very high. It is, however, moderating in response to lower energy prices, the resolution of supply chain problems, and the tightening of monetary policy. It will be some time, though, before inflation is back to target rates of 2 to 3%. The outlook for the global economy remains subdued, with below-average growth expected this year and next. In Australia, CPI inflation over the year to the December quarter was 7.8%, the highest since 1990. In underlying terms, inflation was 6.9%, which was higher than expected. Global factors explain much of this high inflation, but strong domestic demand is adding to the inflationary pressures in a number of areas of the economy. Inflation in Australia is expected to decline in 2023 due to both global factors and slower growth in domestic demand. The central forecast is for CPI inflation to decline to 4.75% this year and to around 3% by mid-2025. Medium-term inflation expectations remain well anchored, and it is important that this remains the case. The Australian economy grew strongly over 2022. The central forecast is little changed from 3 months ago, with GDP growth expected to slow to around 1.5% over 2023 and 2024. The recovery in spending on services following the lifting of COVID restrictions has largely run its course, and the tighter financial conditions will constrain spending more broadly. The labor market remains very tight. The unemployment rate has been steady at around 3.5% over recent months, the lowest rate since 1974. Job vacancies and job ads are both at very high levels, but have declined a little recently. Many firms continue to experience difficulty hiring workers, although some report a recent easing in labor shortages. As economic growth slows, unemployment is expected to increase. The central forecast is for the unemployment rate to increase to 3.75% by the end of this year and 4.5% by mid-2025. Wages growth is continuing to pick up from the low rates of recent years, and a further pickup is expected due to the tight labor market and higher inflation. Given the importance of avoiding a prices-wages spiral, the board will continue to pay close attention to both the evolution of labor costs and the price-setting behavior of firms in the period ahead. The board recognizes that monetary policy operates with a lag and that the full effect of the cumulative increase in interest rates is yet to be felt in mortgage payments. There is uncertainty around the timing and extent of the expected slowdown in household spending. Some households have substantial savings buffers, but others are experiencing a painful squeeze on their budgets due to higher interest rates and the increase in the cost of living. Household balance sheets are also being affected by the decline in housing prices. Another source of uncertainty is how the global economy responds to the large and rapid increase in interest rates around the world. These uncertainties mean that there are a range of potential scenarios for the Australian economy. The board's priority is to return inflation to target of between 2 to 3%. High inflation makes life difficult for Australians, and it damages the economy. And if high inflation were to become entrenched in people's expectations, it would be very costly to reduce later. The board is seeking to return inflation to the 2-3% range while keeping the economy on an even keel, but the path to achieving a soft landing remains a narrow one. The board expects that further increases in interest rates will be needed over the months ahead to ensure that inflation returns to target and that this period of high inflation is only temporary. In assessing how much further interest rates need to increase, the board will be paying close attention to developments in the global economy. Trends in household spending and the outlook for inflation and the labor market are also key metrics the board will continue to monitor. The board remains resolute in its determination to return inflation to target and will do what is necessary to achieve that. In conclusion, the economic outlook for Australia still has many unknowns, but recent trends indicate a further cash rate increase to 3.6% should be expected in the near future. What do you think? Is the RBA doing enough to keep inflation in check, or are more drastic measures required? Let us know in the comments, and thanks for watching.